Welcome to our lesson on journal entries in accounting for Class 11 Accountancy under CBSE and NIOS syllabus. Today, we'll learn about one of the fundamental aspects of accounting, recording transactions in a journal. So, what exactly is a journal in accounting? A journal is the book of original entry, where transactions are recorded chronologically before they are posted to the ledger accounts. The purpose of maintaining a journal is to keep a permanent record of all transactions in one place in chronological order, and to prevent the possibility of omission or duplication. Now, let's look at the format of a journal entry. A standard journal has columns for the date, particulars, ledger folio, and debit and credit amounts. Let me explain each column. The date column records when the transaction occurred. The particulars column lists the accounts affected. The account to be debited comes first, followed by the account to be credited, which is indented and prefixed with 2. LF stands for ledger folio, which is the page number of the ledger where this entry will be posted. Finally, the debit and credit columns record the monetary values. Before we proceed to write journal entries, let's recall the golden rules of accounting which govern debit and credit. For personal accounts, debit the receiver and credit the giver. For real accounts, debit what comes in and credit what goes out. For nominal accounts, debit all expenses and losses and credit all incomes and gains. Let's understand journal entries with examples. Example 1. Rahul started business with cash 100,000 Indian rupees. Here, cash comes into the business, so cash account is debited. The source is the capital from Rahul, so Rahul's capital account is credited. Example 2. Purchase goods from Suresh for 25,000 Indian rupees on credit. In this transaction, goods come in, so purchase's account is debited. Since we haven't paid cash yet, Suresh's account is credited as he is the giver of goods. Example 3. Paid rent 5,000 Indian rupees. Here, rent is an expense, so rent account is debited. Cash goes out, so cash account is credited. Let's summarize the process of recording a journal entry. First, analyze the transaction to identify which accounts are affected. Then, apply the golden rules to determine which account to debit and which to credit. Finally, record the entry in the journal format we learned. To summarize, a journal entry is the first step in the accounting cycle. It records the dual effect of each transaction using debits and credits according to the golden rules of accounting. Remember, for every debit entry, there must be a corresponding credit entry, maintaining the accounting equation. Assets equals liabilities plus capital. Thank you for watching this video on journal entries in accounting. Keep practicing to master this fundamental concept.